Good evening, everyone, and welcome to Admiral Markets webinar. Today is 3rd of June 2015. My name is Nenad, and this is Heiken Ashi Price Action webinar. We will cover how to trade breakouts with a trend and how to take counter trend opportunities. As you remember, we already had a Heiken Ashi Price Action webinar, and this is a continuation, and basically this is also a sort of expansion of the webinar, because we will be talking about taking trend trading opportunities with price action. So we will see how this powerful method and system works. Is based on Heiken Ashi candlesticks, and we can take both counter trend and trend opportunities with breakout method. Okay, so get ready for Heiken Ashi webinar. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. Admiral Markets takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not Timika's opinions, and the website in the video is not a .co.uk website, but a globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is for informational and educational purposes only. Okay? So with having said that, let's see Heiken Ashi. Okay, Heiken Ashi introduction benefits, price action strategy with breakouts and counter trend opportunities. Okay? As you can see, Heiken Ashi is a method which is basically it's a form of charting candlesticks, but the thing is it's similar to Japanese candlesticks but uses a different formula. Heiken in Japanese language means average and Ashi means pace. So actually it represents the average pace of prices. Okay? So these candlesticks can be used to identify trending periods, potential reversal points, and classic technical analysis patterns. Okay? So the technique which we use for charting Heiken Ashi is different than using traditional candlesticks. And Heiken Ashi thus modifies Japanese candlesticks by sending the open and close through a calculation of the average. Okay? So benefits from using Heiken Ashi are direction. You can clearly see the direction by using these color-coded candles. Then strength of price action and momentum. Then wick, which is very exactly. I think that wicks maybe are more important, especially for this strategy, because you will be using trend lines, and those wicks will be connecting trend lines. So wicks are very important, and you can clearly see wicks on these Heiken Ashi candlesticks better than on traditional Japanese candlesticks. And Carolyn is saying a wick is showing power of trend. Exactly, it can you show the power, but more importantly, it can show you historical reactions of the price. And when there is a historical reaction to the price, we usually expect that behavior to happen again. If the price had been rejected from one point, a certain point in the past, we would have also expected that that same point would be rejected again. So if the price is trying to close trying to get to this point. That is why I'm always saying points of confluence. And those wicks have a lot of influence in my charting and trading style. And if you traded, for example, last session recap, you could have seen how good trades we had, especially on euro dollar, euro yen, pound dollar. All those trades were basically, they use concepts of POCs. Okay, session recap, last session recap gave us more than 150 pips. And you could have made even 100 pips on euro dollar solely. So Ilya is asking, hello Ilya, you're not missing anything. So basically we are at the start. We are just starting the webinar, so don't worry. So guys, all those setups which I have been presenting you through all these weeks and all these analysis, it's very important to know that I strongly recommend and use wicks. I don't know how other traders and other analysts do, but in my opinion, wicks are telling you more than bodies very often, because those are the wicks which create supply and demand. Those are the wicks which create buying and selling of the specific zone. Wicks are showing you swings. Wicks are showing you points where you connect trend lines. Okay, so that is very important to state, that wicks very often have more important part in trading than bodies. And Heiken Ashi candlesticks are basically giving you even better connections to trend lines than standard Japanese candlesticks. Okay, so yeah, the questions, guys, I can see some questions now. Okay, you're right. There are a lot of pips to harvest when you present Monday webinar. How you manage a trade which is triggered at night? Okay, I will answer the question during the session recap webinar. So do not worry about it. Just be sure to ask me this question, Caroline, or who asked me this? Yes, Caroline. Ask me the same question on my webinar on Monday, and I will explain how to manage a trade at night. But exactly, yes. Let's get back to webinar. I have noticed Heiken Ashi give different wicks ends, yes, than the ordinary. So when using fibs, do you use Heiken Ashi or standard candlestick wicks? Well, at this point, Yen is asking the question. At this point, currently, I'm showing you free strategy which I have prepared for you. This is my strategy, which I have been preparing for you. It's Heiken Ashi. But very soon, I think maybe next 3 months, I will be also presenting exclusive Heiken Ashi strategy, which could be found and which should be found on my elitecurrency.com website, which will be using combination of Heiken Ashi and range bars. And currently, that method is being tested, and it gives me great results, because it gives you a lot of entries per day, and it's actually scalp swing to intraday trading method. It's great. And basically what I'm trying to say, some principles from this webinar will be also included in that Heiken Ashi strategy, which will be introduced on elitecurrency.com, my website. Okay. In this particular strategy, we do not use any Fibonacci retracements. This is different, and you will see how it's different. And you're right, Yen. You're right about giving you other. You will see Heiken Ashi is basically Heiken Ashi candlesticks are smoothing out the price, and the price can be sometimes and very often more easily seen on Heiken Ashi than on Japanese candlesticks. And you will see that in today's webinar how it's easier to spot that. Okay. So this is the strategy proposed. I don't know. The question, I propose strategy from YouTube to Chris. I don't know. I particularly, when I watch YouTube, I just watch other things. I don't watch any trading advices on YouTube, so I don't know what people post on YouTube. I listen to the music. I'm watching uh, some series. I'm a big fan of some series, foreign series, of course. Those are programs, for example, Game of Thrones and those kind of things. I watch those kind of things on YouTube, and I'm particularly not interested in any strategies or whatever is presented. Okay, I use my own method, and I just don't want to interfere with others' teaching. So everyone has the right to post on YouTube whatever they want, as long as they do not offend any others. So my politics is definitely, I respect everyone's opinion, but I always do according to my opinion. That is how I do it, and you can see it. Eitan is asking, Eitan, the question. Just tell me which question was that, and I will answer. So do not worry. Okay. Like, I don't know. We will present. I will do this Heiken Ashi today with standard moving average. You will see it's a very good strategy, and you will know when we will do. Both Chris and me are working on, not on, it's basically Heiken Ashi and range bars. So you will see. But at this point, guys, let's get back to Heiken Ashi. So those are color-coded candlesticks. Color-coded candlesticks. So when you see color-coded candlesticks, you know that those candlesticks can often represent momentum. Okay, so that is one of the advantages of Heiken Ashi candlesticks. They show you momentum. Okay, so you know when is a good time to enter the market. Okay, this is how standard Heiken Ashi candlesticks look like. So you can see that it's a bit different representation from standard Japanese candlesticks, but actually that is a good thing. That is a good thing. That is not a bad thing at all. And you can easily spot highs and lows by using Heiken Ashi candlestick definition. So you can easily spot both highs and lows on Heiken Ashi. And through these color-coded candles, we can read the trend, we can identify momentum, and thus we can basically place our trend lines. Smoothed candlesticks are different, and now the main difference in the terms of methods and systems is that standard Heiken Ashi candlesticks, okay, are used, okay, those candlesticks are used in price action trading most of the time. And Heiken Ashi smoothed candlesticks, so this is standard, do not be confused. This is standard, this is smoothed. Smoothed are used mostly in indicator-based systems, okay? So those are the main difference between using standard Heiken Ashi and smoothed Heiken Ashi. Standard are used in price action, smoothed are usually used in indicator-based systems. Eitan is saying, Nenad, maybe you will answer question in the end. Thanks. Eitan, please tell me which question. I will answer any question, so just tell me which question. You can ask me again. Type your question here in the chat screen and I will be answering that. Don't worry. Okay? So this system, which I will present you, I traded 30, 50, 100 EMA. I don't know if any one of you followed me, back in 2009, 2010, when I was posting on Forex Factory Euro Dollar thread. And then back in days, I used 30, 50, 100 EMA combination. That was the year of 2010, and I still didn't know anything about Heiken Ashi candlesticks. Trading 30, 50, 100 EMA gave me one of the best trades readers could have read on Euro Dollar thread. And back in year of 2010, Euro Dollar was the most popular thread on Forex Factory website, and you know that Forex Factory is the biggest website for Forex trading in the world. And actually I had so excellent, I can say it's not a correct word for that. There was a huge success in my analysis and trading that back in days by using just 30, 50 and 100 DMA. I posted setups regularly as I post today with Camarilla MACD, but it was only for Euro Dollar, so there was no other pairs involved. So I only traded Euro Dollar back in days. And the thing is, that initial success and impulse which I had on Forex Factory, basically that was mostly thanks to 30, 50, 100 EMA combination. Now, obviously, 30, 50, 100 EMA combination with price action will give you great trading opportunities. Now, I have gone through a period of testing Heiken Ashi applied to standard Japanese candlesticks by using 30, 50, 100 EMA. And those results are very good. As I say, I have created 30, 50, 100 EMA combination in 2010 just by using price action. Today, when we combine it with Heiken Ashi, we can even trade other pairs and smooth the signals, not just for Euro Dollar, but for also other pairs. And some of these principles will be used for Heiken Ashi and range bar combination, which will be presented on the lead currency, of course, but it's still in testing phase, so you will be noticed when it comes. Okay. Carolyn is asking any particular reason for using these numbers for EMAs. Yes, Carolyn, there is a reason for using 30, 50, 100 EMA. Okay. The first reason is the price action principle needs to use interim, medium, and major trend, or you can call it short, medium, long trend. Okay. Back in days when I was trading just with Japanese candlesticks, 30, 50, 100 EMA, I have noticed that Euro Dollar was showing great trending patterns and rejections from 30, 50 and 100 EMA. Today we are using it with standard Heiken Ashi, not with smoothed Heiken Ashi, with standard Heiken Ashi. And still, by observing wicks which Heiken Ashi candlesticks are showing, by observing the wicks, we are actually observing rejections from 30 short, 50 medium, 100 EMA long trend. Okay. So price action principle of triple EMA for showing the trend has been always successful. EMAs are EMAs. No matter if the market changes or it fluctuates or it's volatile or non-volatile, 30, 50, 100 and generally EMAs will always be good for showing you trend. Okay. So 30, 50, and 100, I have noticed that standard Japanese candlesticks are rejecting from these levels very accurately, from these EMAs. The same thing is for Heiken Ashi, but you can see it more clear than by using just standard Japanese candlesticks. Okay? You will use trend lines for entries, and I will show you how. So this is the main driver for price action on your chart. Not any combination, but 30, 50, 100. You will use trend line breaks for entries. So I call this method Heiken Ashi Price Action breakout, but it's actually breakout of the trend line with the trend. You will be using pivot points, or it's up to you. It's not necessary that you use pivot points for taking, of course, your profit, but it's not necessary. And you will be solely trading it on 1 hour chart. Now you can, I am not telling you that you switch the chart, but I have been doing exactly as this: 30, 50, 100, 1 hour chart for Heiken Ashi price action. Okay. I don't know how it behaves on 5 minutes, 50 minutes, 30, 4 hour daily. I don't know. 1 hour chart is my method of choice, my time frame of choice. Okay. Now, also the answer to question why 30, 50, and 100. Because 30 is showing you short trend, interim trend. Okay. 50 will show you medium trend, and 100 will show you major trend. Price stands, from my trading observation, which I have been conducting with Japanese candlesticks, with retracements, with EMAs, I have spotted that 30, 50, 100 are good support and resistance levels. Okay? You will see that in the example, of course. Now the question, why 30 and not 29? Because it's a small difference. It's a small difference. And I have tested this. I have been trading this on Heiken Ashi. 30, 50, 100. I don't know why not 29, because 30 is a round number. 29 is not round number. There is reaction on 30 EMA. There is reaction on 50, and there is on 100 EMA. And 30 represents the previous days. So would you use 29 or 30 days? Month is usually 30 days long, not 29. Okay? Traders use round numbers. And this is the combination for Heiken Ashi price action. Modified price action 30, 50, 100 trading from my trading of 5, 6 years ago. Okay? As I already told you, 5 to 6 years ago, I was trading 30, 50, 100 on euro dollar standard price action trading, and entries were different. You will see rejections from 30, 50, 100 and trend line breaks. You will see how powerful this can be. So main principles for Heiken Ashi, this kind of trading, is first establish the trend. Then we need to wait for retracement. This is trend breakouts. This is not counter trend. After this, I will show you counter trend. So establish the trend. Wait for retracement to EMAs. Take the trend line breaks after the candle close. Targets are pivot points or previous high lows, and stops are placed 5 pips above or below last swing. Okay? This is how it will show you on your chart. A red above white above blue. okay, and EMAs are down, this is downtrend. Red, white, blue. Blue, then we go blue, white, red, this is uptrend. Trend line needs to have at least 3 touches. Remember, this is Tom DeMark rule. I have applied Tom DeMark trend line rule for this kind of trading because I have noticed that Heiken Ashi gives you great trend line breaks with 3 touches of Heiken Ashi wicks. Candle close should be red for sell trades when trend line breaks. Okay? Trend line breaks. Pay attention. Candle should close bullish and white for buy trades. Question, last Heiken Ashi webinar you showed the EMA with red, blue and yellow. I have modified this. This is why, guys, important to attend all these webinars. Because today we will add one more rule. That is why I have changed. And this is counter trend trading. I will show you after this counter trend. Okay? You can put yellow color if you want, but this is better for me. This looks way better with this color here, okay? Look, yellow. Yellow is not so, okay? We do not trade this. We trade only 30, 50, and 100, okay? So yes, Ilya, if you watched previous Heiken Ashi, this is modified version of Heiken Ashi, and this is what you should be using at this point, okay? Focus on this, okay? Some principles are the same, but focus on this. Okay, that is why I'm saying, guys, it's always important to visit all these webinars. It's not just talk. We always need to modify things. We always need to modify and adapt to current market conditions. If we do not adapt to current market conditions, we can be in a big problem. Okay, so this is when you see a short trend. So 150-30, red above white and white above blue. So this is clear downtrend. Okay, when you see this, you don't watch the chart. You're not interested to trade this kind of whipsaw movement. Price needs to retrace. Look how those candlesticks are. For this method, I can say that it's even better than standard candlesticks. So this is clearly bullish candlesticks, and you can see this is retracement. When you have 1, 2, 3, 4 touches, guys, here. And you can see the trend line is perfectly touching Heiken Ashi candlesticks. Even better than Japanese candlesticks. Look. So you need for an entry, you need candle to break through the trend line, and it should be red because you are taking short trades. So by taking red candle, you're effectively going with red, with short trade momentum and short trend direction. Remember Williams' Blow teachings. Direction, momentum, and divergence. Read his book. One of the very first books that I have read as new trader back in days, 7, 8 years ago. Okay? So this is basically divergence of these EMAs. Then we have candlesticks for showing us momentum, and you have direction because this is clearly downtrend. Okay? So this is downtrend. It's always best to see good slope, such as this one. This is not a good slope. This can be a change of the trend. And this is, again, very, very good. Okay? So now the question which Kellen is asking, if we have blue and white sloping down and red is above all but sloping up, usually there will be aligned like this. If you see this, this is not to be traded. This is the time when you take the trades. 1, 2, 3, 4 touches. 3 is minimum. Red candle break. At the close of the candle, you make your entry. 1, 2, 3, 4 touches. Trend line break, candle is red. You take the trade. Okay? 1, 2, 3, 4, 5, 6 touches. Candle break and candle is red. Okay? And you can see how the interim trend is changing. Smoothed candles, we do not use it because smoothed candles do not represent good price action reactions such as these rejections of these EMAs. Okay? I have noticed that for price action trading, Heiken Ashi standard works better than smoothed. Smoothed is only for indicator-based systems. Okay, so this is Heiken Ashi standard. Okay, Heiken Ashi standard. Stop loss when you take this trade should be placed 5 pips above this candle. Okay, 5 pips above this candle. This is conservative stop loss. Aggressive stop loss can be placed just 5 pips above previous EMA. So if this was trendline break, previous EMA is this, and you place 5 pips stop loss here. So you can have 2 different stop loss placements, aggressive and conservative. If you take in this trade, obviously your stop loss should be placed 5 pips above this level, aggressive. If you have taken this trade, stop loss should be placed, okay, this is obvious, you can place it just 5 pips above this level. If you have taken this entry, stop loss should be placed 5 pips above this level here. Okay? Another example. You can see how the trend has changed here. Okay? And you need to connect wicks of Heiken Ashi. Okay? So 1, 2, 3 touches. So always pay attention that before you make an entry, candlestick should touch at least blue, but it's always better to touch white or red. So that is called retracement. And these are levels of resistance in short trade examples. Okay? So this is how you do it. Okay? And this does not have any relationship with fundamental analysis. This is only technical trading. So guys, I hope that you understand when you should trade and where you should not trade. Today we had ECB meeting, and I hope that you haven't traded it because it's always very volatile, especially if you're not experienced with trading. You should not trade it. Trade after ECB, not during ECB. So when you see strong news, this is one of the rules for trading. Do not trade when there is strong news kicking in. Do not do it because chances are you will lose the money, okay? So this is standard trading when we did not have any strong news, okay? So 1, 2, 3, 4 touches here. Candlestick break, close, you place 5 pips, your stop loss. Your targets are always pivot points or previous levels of support. If previous levels of support is broken, you can even have a bigger target. You can open daily chart and look for supports and resistance on daily chart. Okay? 1, 2, 3, 4 touches. This is your entry. Okay? And another profit. So 5 pips above this candle. And always include spread when you place your stop loss. This is the best. This is always the best case, guys, when price is retracing to red EMA. That means that you have a big retracement, but you still can make great entries, even better than when price retraces to blue or white. Okay? You can use whichever pivots you want. You can use Camarilla pivot points. You do not use hourly pivot points. Because you do it on 1 hour chart, you should use daily pivot points or Camarilla. Okay? 1, 2, 3 touches, guys, here. Touch of this red, red above white, white above blue. Trend line break, your entry is here. 1, 2, 3, 4 touches, trend line break. You see how the price is perfectly following the trend. 1, 2, 3, trend line break, and down we go. Okay? So when there is a strong trend, you will have great trading opportunities. Okay? Great trading opportunities. This is example for buy trade. Guys, I'm not sure that you can listen to me clearly, because Carolyn, you are asking again, what about target price, TP? I was telling you that you can open your daily chart and watch for support and resistance levels and take profits there. Or you can place Camarilla daily or standard daily pivots and take targets around those numbers, okay? Okay, so please listen to me when I speak, just because it's bad that I repeat 10 or 15 times same thing. So pay attention to this, please. I'm trying to teach you. I'm trying to give you good method. So do not look around on other websites or price action or movies. Just focus on the webinar. Okay? Sometimes when trend is strong, you will also see rejections from blue EMA. That means that the price is not keen enough to give you a good deep retracement. Usually when there is big news and big strong price action, price will reject of blue EMA. As I say, it's always best to retrace to red. But sometimes even those shallow retracement can give you the entry. 1, 2, 3 touches here. And this candle is your entry. This is always the best. 1, 2, 3, 4, 5 touches. Look at reactions. 30, 50, 100. Bang. Trend line break. White candlestick. Your entry. Okay? So this is how you do it with trend trading breakouts. Okay, this is trend trading breakouts. Okay, and now we move on to counter trend trading breakouts. Okay, yet another example for long trades. So then we will move to counter trend. Okay, 1, 2, 3 touches, guys. Look at EMAs and bang, your entry here. Your entry here. Everything is clear. 3 touches, connections of trend lines. 1, 2, and this is the third touch. Although it doesn't show a wick, but it can be deemed as a touch. Okay. Here also. 1, 2, 3. Look. 3 touches. 1, 2, 3, 4 touches. And look at 50 EMA rejection. bang, your entry. So guys, when you see a big trend, by using 1 hour entries with 30, 50, 100 and Heiken Ashi candlesticks, I'm really a fan of Heiken Ashi candlesticks. So that is why I'm very eager to explain all these methods and things. You can have great entries. Great entries. Okay? For counter trend trading, you should open daily chart. Then place trend line at most recent swing point. I will show you how to do that. Then after you did that on daily chart, you should open 1 hour chart. Okay? Heiken Ashi candle needs to close bullish for buy, above the trend line for entry, or it should be closed bearish for sell, below the trend line for entry. Okay? Usually I trade major pairs with this, but you can also trade minor crosses. So euro dollar, pound dollar, Australian dollar yen, New Zealand dollar, dollar yen, dollar CAD. And also you can trade crosses. Okay. So how to trade counter trend? Open daily chart. This is daily chart. And let's say that we want to take trades at this point. So we are here at this point. We open daily chart. We mark most obvious previous swing. So this is the most obvious previous swing. Okay. And look how many buyers are here. Because you can see from this wick that this region above had attracted many buyers. So you place your trend line at most obvious swing, and then you switch to 1 hour chart. You wait for trend line break with bullish Heiken Ashi candlestick. Okay, so this is the point. You can see we are here, and this is the point here when trend line was broken. Okay, you are going with a possible counter trend opportunity. Price was falling down, 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 and suddenly it wants to go up. And look, you just mark the level. After candle breaks and closes, in this example bullish Heiken Ashi close, you make your entry. Same example, other example on euro Australian dollar. So let's say that we are here at this point. Okay. Yes, yen, you need to mark swing points for this. So this, if you, for example, we are here and we are watching previous price action. So you can see that most obvious swing is here. You mark horizontal trend line swing. On 1 hour chart, you can see clearly your entry. Okay, let me give you better screenshot of this because you cannot see it clearly here. Let me just redo. Okay. So again, here you can see it. So this is it. You wait for trend line break on 1 hour chart. Okay. This is, so now I needed to put 1 hour instead of daily, but this is clear, guys. Open daily, mark previous swing, open 1 hour and wait for bullish breakout of the previous swing. So this is counter trend trading, because you can see daily is short and price is dropping, dropping, dropping. Then you mark just previous swing and wait for bullish breakout here. Okay. Same here, but we need to use 1 hour for entries. I mistakenly put daily. So once this trend line here Okay, just focus on this horizontal trend line. If this breaks with bullish Heiken Ashi candlestick on 1 hour chart, you go with your entry. Your targets are either 30, either 50 or 100 EMA because you are trading counter trend. Okay, on 1 hour chart, your targets are either 30, 50 or 100 EMA. Okay. Now additional tips, guys. Do not trade when major news should be out, especially ECB and FOMC. And do not trade, guys, on bank holidays. Now I will pause the screen for a brief moment and I will open a live chart to show you how you can do it here easily. Okay, so pay attention to this, guys. Okay, just let me close it here. Okay, and I will show you the screen right away. So guys, you can clearly see, okay, how price is actually behaving on daily chart. So you can see daily. This is daily. So let's see that we are here, trading here, and we see that previous swing is here. So you want to trade this counter trend opportunity because price is trying to go up, and you see that it will break. You just zoom into 1 hour chart. Okay, we now need to find this trend line that will be a representation of the price at a given period. Okay, and okay, so let's see. This is your breakout. This candle here exactly broke, or this candle also broke above, and you can see easily to play stop loss 5 pips below previous low, as we said, and your entry is here. Bang, 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 bang. Upside. Very good trading opportunity. Okay. Let me do another example. Okay, this will be also great for you guys. Okay. Let's see. Okay. Okay, let me clear. Okay. Let's go with, for example, Euro Yen. Okay. Euro Yen. Yes, we had good Euro Yen on a recap. Euro Yen, let's see where it is here. So guys, trend entries, okay, trend entries. Wait for pullback. Okay, this is good representation, but we don't see a pullback here. When there is strong trend, you will see shallow retracement. 1, 2, 3, 4, 5 touches, guys. Look, touch. So the first rule is you need to have a touch of the trend line. Do not forget about it. Do not forget about it. You need to have a touch of trend line to place an entry, guys. So touch of the trend line is always needed. Okay? Touch of trend line is always needed. Touch of EMA is always needed. Do not forget about these simple yet effective rules. You need to have a trend line break, you need to have trend line touch with wicks, and you need to have at least touch of blue, at least touch of blue, then white, then red. Always it's best to have pullbacks to the red. Look at this, guys. What do you say about this? 1, 2, 3 touches. Look, trend line break. Blue above white, white above red. Bang to the upside. And stops are placed 5 pips below this point. Now, how to make counter trend opportunities? That is the question now. How to make counter trend opportunities. Okay, this is valid entry, guys, because blue is above white, white is above red. This is uptrend. It's good as long as blue is above white, white is above red. This is not good. This is not good. This is good. Okay, this is good. Slope is good, but this is bigger retracement. This is not good. You don't trade this. You don't trade this. Okay, this is not good. But this is great. Okay, and for all of you who are skeptic with my methods, there is always on Forex Factory account statement. And all of these methods, Camarilla, MACD, and Heiken Ashi are running through these statements. So everything has been tested and everything is very clear and everything is solely done with Admiral Markets. No other brokers involved. Okay. So here, look at this. This is just plain trend trading. 1, 2, 3 touches. Here, almost 3 touches, but you can connect this and you have still this touch here. Look how good those entries are. This is all trend, okay? Look. Okay? So let's see counter trend. Counter trend opportunities. Okay? Open daily chart. Look at this. Huge daily chart. Now, what do you think? Let's, what is this? Oh, unintentional sell limit. Okay. How should we trade counter trend, guys? How? Well, guys, now this is tricky question. Let's see example. I will use the Heiken Ashi. Let's see. Okay, sorry for this. I still have previous webinar. I will remove this unnecessary. Sorry, guys. Let me just redo. Okay, let me redo these moving averages. This is how you do 30, 50, 100. Okay, 100. Okay. Okay, guys. Now it's ready. Okay, how do we do it? Well, pretty much straightforward. Okay. For example, we are here. Let's say that we are here at this point. Okay. And we want to take counter trend opportunities. So this is daily chart. So we are at this day. You understand what I'm trying to say, because now we cannot trade this movement. It's obviously there is no counter trend opportunities, but this is the moment when you trade counter trend, because the move has already started counter trend. So you want to see what will be the price for trading. So this is your day where we are trying to make counter trend. This is most obvious swing point here. Okay, this one, guys. Look how you need to identify this by yourselves. This has already been broken. This is not most obvious swing. This is most obvious swing. Look, it always stands very clearly compared to other swings. So you can see how it's represented here. Very clearly, okay? Very, very clearly. You open 1 hour chart now and try to find an entry. Okay, let's see if we can find it here. Okay, show. Okay, where is it now? I have, okay, daily. This is 21st of April. Okay, February, March, April. Okay, look, guys. Now you're waiting for breakout of this trend line on daily. Look, breakout happened at this price here. Bang. Okay, so that is how you do it. So if you have any questions, we can conclude this webinar. If you are interested, we can have another webinar where we can find, try to find potential entry setups with Heiken Ashi. This is the method for Heiken Ashi. So if you're interested, we can have another webinar where I will be using other examples, where I will be showing you other entries possible and so on. So if you are interested, great. I see a lot of comments that you are interested. I like to watch this again, but on Admiral YouTube, I'm unable to find current webinars. This will be uploaded, okay? So Yen, this should be uploaded tomorrow, and you will be able to see it tomorrow, okay? So this should be uploaded. Do not forget to check Admiral Markets website tomorrow. So this should be uploaded tomorrow, okay? So just be patient and it will be uploaded. If something happens and this is not uploaded, then we will talk with Admiral Market Support and we will solve it. So you just send me an email and I will give you the link, okay? A template for Heiken Ashi today. Sure, guys, if you want a template for this, just send me an email and I will be sending you the template. I will be doing this webinar again. Okay, this can be scheduled for July. So stay tuned and you will see another webinar on this subject on July. Okay, so guys, stay tuned. We will be doing this. Why not? This is good. And try to demonstrate it and then try to do it live. You will see how good it is. Okay. So guys, thank you for listening. I will be here with you soon. Of course, do not forget to sign for session recap on Monday. We had great week, and my email for all of you who doesn't know, my email is tarantulafx@gmail.com. So this is my email. Douglas, can you talk to your team to upload 4 most common errors done by novice traders? Yes, Douglas, I'll tell them. I hope I won't forget. Modris is saying you don't answer anyway. How I don't answer? I always try to answer, and I'm really trying to. Yes, I was answering emails, but guys, I need to say I receive more than 150 emails per day, and I'm really sorry if I forget to answer. I always answer. Why wouldn't I answer you? And okay, do it now, please. Just when we finish with the webinar, maybe it's in my spam folder, I don't know. Just do it as soon as we finish with this webinar, and I will be explaining you, okay? And we see the comment, maybe he has Yahoo Mail and Yahoo to Gmail might not work. Maybe. I'm not sure, but please do send me just after we finish this, and I will be glad to answer you. Okay? So yeah, Carolyn was sending from Yahoo, and when he switched to Gmail, it's okay. So guys, I'm here with you. I will be helping you. I am trying to answer all the questions, and sometimes if I forget, please do not be mad at me. Just send me an email. I will be glad to answer you. And of course, follow me on Twitter, sign for new webinars, session recaps, and watch new analysis. And do not trade when there is big news coming in, okay? It's always safest to wait for the things to settle down. Thank you for listening, and I will be here with you soon, guys. Cheers! Trade safe.